We start off with a less than jolly kickoff to what's traditionally the best month of the year for stocks. The Dow, S&P, and NASDAQ all sliding on weakness in manufacturing and continued trade tensions. So will we get that Santa Claus rally this year, or has the Grinch taken control of this market?
Wow.
Guy.
Take it.
Like that. I knew you'd like
Take it
that.
from there.
No, I don't. That's the Santa Claus thing.
And then the Grinch.
Makes me almost as crazy.
Oh, as the gobble gobble.
Gobble gobble.
Really?
How is your
then
turkey?
we'll just
day?
have to do it more often.
You hear that? You know, last night on one of the networks, there was Santa Claus is coming to town, the hour-long version.
Tonight is
Did you
Rudolph,
see that?
by the
Tonight is
way.
Rudolph.
Buyer.
Pardon me?
Major buyer.
A huge buyer.
I mean, it's an underrated
I agree with
piece
you.
of entertainment. What can I tell you? It's fantastic.
But I don't think, listen,
you.
I don't think you're going to see this rally into year end, but I haven't thought that for a while. In the last couple of days, remember there was a trading day on Friday and today, I think the market is finally starting to show some of its warts. And this trade deal that I thought was phase one was done in October apparently still isn't done. And I think that's definitely the sort of Damocles right now. I don't think anything is happening this year or early into next year. So December 15th is going to come around. I think it's going to force President Trump's hand. And I think that's very negative for the broader market. So I don't think you're going to see the rally into December 25th, which a lot of people know as Christmas.
Ho, ho, ho.
Yeah, ho, ho, ho.
Nice use of sword Damocles, by
Right,
the way.
Damocles.
Isn't that a nice
We all
shot?
looked at each other kind of surprised.
Good, right?
Yeah.
Yeah.
But when you
Jesuit
say
education.
With all due
when you say
respect.
forces his hand to reinstate.
To absolutely go forth with, to move forward with the tariffs.
Except for that Axios report, which said that him signing the Hong Kong legislation was a real problem.
Yeah, I mean, listen, he was in a box on that one.
Yeah.
Listen, you know, when you think about tariffs, you think about really what the mechanism is. Like, you know, they've weaponized them, trying to kind of force or use them as leverage to get the sort of deal that they want. But they're an enforcement mechanism for trade deals that we have. The fact of the matter is, and I think some of the news about South American tariffs, we know that Europe is still up in the air. We know the USMCA is still not done. You know, it's being fought on multiple fronts. So I guess that's really the issue. And then you think about the data that we had today, the manufacturing data here that was, you know, a little worse than expected, and then the Chinese data that was a little better than expected. It comes down to leverage, who's got it right now. And I think the sooner that we get into 2020 without a phase one deal, I think you can just push the goalposts along, because it really will be on the calendar of our election. And I don't think the Chinese will have any real inclination to do anything big.
I thought the market actually didn't do badly today, given that, you know, this Brazil, Argentina, I thought that had the potential to be more destabilizing than it was. And when you think about November, we were up almost 4%. That's a pretty big move. So, you know, this pullback of a little less than 1%, I don't think is actually a big deal at all. I think you're right. I think that we're going to see something bad coming out. I mean, 2 or 3 weeks ago, we were at the short strokes of the deal, and then we were in the final throes, which is what he said, which I think actually means near the end, not near a deal. But I think he meant it as near a deal, and yet here we are, nothing. So I think you're going to be right, and that's going to be bad for the market.
Well, I mean, despite the Damoclesian reference here, Guy, which was fantastic. I mean, I think this perilous dynamic here is as much about in 41 sessions, we moved 10% on the S&P going into today's print. And you had a VIX that was 11.5 last week before we went off for gobble gobble day. So I think you have a case here where the market really did, whether they priced in a lot of the Santa Claus rally or not, you had a dynamic where we saw the PMIs that were largely, I would say they were largely better today. But again, that stabilization dynamic is something that I think markets priced in probably a month ago when PMIs started to stabilize. So I think in a world where the Fed is absolutely on hold, where third quarter earnings were absolutely fine, people are underinvested, you have a seasonal dynamic, you have a president that, for all the politics that we all know are going on, has every reason to do some kind of a deal. A deal will be announced. Whether it will be a real deal, whether it will be the deal the Chinese really want to sign on for, it doesn't matter. But I think it's more important about positioning and where markets move and how quickly they move. And again, Apple, Google. I mean, look at the leadership we've had in mega cap companies over the last month. I think this is not a surprise.
A deal will be announced eventually, or a deal will be announced by the end of the year?
A deal will be announced eventually. And in fact,
okay.
I think it's probably good politics, if I had to guess, to not go in for a deal right here before year end. Why do you have to?
Well, I think that's exactly the point. I think statistically or historically, if you can sort of get the market on your side by April, May, it seems as though re-election's sort of in the bag. So why would he do something in December when he could string it out, he being President Trump, until the
January,
spring,
February,
and then set himself up for possible re-election? So I think again, I don't sit in his meetings, but my sense is he's willing to take the pain in the short term for the market to be able to do something in the spring and then set himself up for re-election
So was
next
this
fall.
simply profit taking in a market where the risk reward is to the downside at this point going into year end? Is that why we saw, for instance, technology sell off the hardest?
Well, I think there's a couple things in
hardest.
technology. I mean, you talk about some of this mega cap leadership. Apple is a stock that's getting very expensive to its history right now, and it's anticipating a whole heck of a lot.
re-rating, and that's why it's.
Well, yeah, and so you're seeing multiple expansion for the first time in the stock ever, but you're also seeing a stock that's up 70%, and we're not certain. This was a year where we saw negative EPS and sales growth year over year. So for this thing to outperform, let's say whatever index or whatever market you want to place it against, that's going to be a really tough road to hoe in 2020. And I'll just mention this: when you look at software and you look at some of the stuff going, the valuations have gotten really stretched here, right? So these are for companies, a lot of them that still on a GAAP basis don't make money. So it makes sense when you have gains like this heading into the uncertainty of 2020, I think, to probably trim some profits. We could be in a very different landscape next year.
I think that's right, but I also think on a day today was particularly interesting because everything sold off, right? You had a sell-off in rates that I think is maybe more interesting, just because there were some headlines about the Fed maybe letting their inflation targets run, and maybe that means actually you could see rates move a bit higher. But I agree with that. Part of the relief that comes out of the third quarter, though, is the Fed is stuck. So whether the 10-year's stuck at 180 or whether it's stuck at 220, it's not going to 3 anytime soon. And a low-rate environment, which means multiple expansion, that's the whole dynamic. And I think it's just what people are willing to pay for stocks in this environment where seemingly, and I know Guy believes differently, and he may be right on this, there are a lot of risks out there, but people feel risks are more under control.
Karen, you sound more cautious than you have been. So
Yes,
have you been trimming your positions, or you've just been using options to hedge?
Mostly using options ahead, sold some upside target calls, things like that. I mean, it's moved a lot. I still love the name, but it's getting a multiple re-rating is it's nice, but it's also a little bit scary. So you got to sell some against that.